Right. Stacey Burke studies Kiwi, last day of the month, last day of the quarter. Potentially tricky markets to navigate with rebalancing of flows, etc. Anyhow, this is the state of play. So this is the week's high. This is the week's low. We're at the upper third of the box of this range, the week's range. The bias for me is to the downside to clear up the orders that have been left behind here and to tap into below the lows of the week, the bearish cycle with a new month starting next month to go back up and clear up the money that's been left behind on the downtrend from last week and month. So that's the bias. Now, we've had a retest of the week's highs, failed. Again, another reason to be looking to be short. We've come up 1, 2, 3. There's the pump, there's the dump. Expecting a continuation of the dump. So we've had this move higher. We've also had a failure of this head and shoulders to the upside, failed to break highs, as I've said. We've got this sort of peak formation here at those highs. We've moved back in London. The market has dropped into the low-hanging fruit, broken broken structure down here. This is the lowest, the higher low of the higher low before the high of the trend. So that's the structure. This also was structure over here, smashed through it. We've got this M formation on the 4-hour chart. You can see it more clearly. There it is. Now, the question is whether we're coming up to retest the neckline and 57 the figure. Does it have the legs to do so? There's a price imbalance here, up there, as marked by this indicator. It's already cleared a good portion of this price imbalance. So, right, we've already made a 38.2 Fibonacci correction of the bearish impulse. It's a pretty strong correction. So, could we expect more? Could we expect more into the neckline? Quite possibly. Now, the tricky thing here is that so Wall Street is opened almost an hour ago, and we had that move up. So is that now the peak formation of the session? Double top. I mean, on the inverse, some could argue that we've had a double bottom down here, right? And these are the pins. So we've had one push, two push. Is this the third push before heading higher? But again, I have to remind myself, the bias, where are we in the weekly template? We're in the upper third of the box. So the bias is to the downside. So, I mean, what we haven't seen is a blow off either way, right? So I'm now on the 1 minute chart. Initially, if we draw back to here, this was looking like, okay, right, well, looks like we've got the M formation. This is the break of structure from what I showed you earlier. What I showed earlier. Let's pull that back so we're just clear on that. So this was the break of structure. So trend line, the last higher low before the tops of the trend. So that is the structure. So we've broken that structure. We've had a retest into the structure. So that's that explained. So initially I thought, well, perhaps this then is this candle here. This was the trigger for the expected blow off to the downside, which we have not had. Instead, we've put in sort of like a double bottom at prior structure. So depending on your entry for that and your stop loss, so had that trade been taken, presuming that these were the highs of the day, let's say we decided to take that somewhere around here. Right, okay, well, let's put the stop above the highs. We would have been stopped out. All right, so more conservative, you might have put them up here. That's a huge stop loss. Anyway, so that's the question that's left unanswered. You know, at what point do you engage with this market? Um, because had this just melted and you weren't in it because you want to see if that is indeed the peak formation, if you're waiting for this kind of confirmation um, that the price is failing to break higher, and if you were concerned about the fuller correction of the bearish impulse on this M formation's last leg, you know, I mean, look, you still can be a correction up into the neckline. So if that is your concern, well, then the stop loss needs to be way up there. You know, and is it really worth trading view, by the way, is not my favorite. A friend at the moment. It's not doing anything I'm trying to ask it to do at all. Right, so, you know, you've got a 50 pip stop, let's say above the 78.6 to be really safe. More conservatively, if it's going up there, it's going to take out 20, so presumably. You know, so you've got less than a 2R on that. Let's get that's what it is, it's the magnet. If we're, say, in there, we're getting a 2 for 1. Right? So that's an option. But so we're moving down to the 1 hour chart now. Now, so you've got this kind of, you've got the risk. Okay, so we've come up to the 38.2. This is indicating perhaps that this is the session high. right? We're already, an hour into the New York equities. So let's say that's the high for the day. Put our stop loss above there. And that's a better risk to reward. No, because we're all the way down here now. So, I guess the way to go would be to, on a break of these lows, and perhaps yesterday's New York session low, we're going in. Yeah, we're going in for the kill to clear out this. So in that case, we're going to move the target all the way down to there. In fact, no, we're going to come up into here. For a day trade. The expectancy would be to clear out stocks below there next week, but for a day trade, in there, just below, just around this area here. This is where some money is, right? So, is that the safest way to play this? You've got this support. If we were to enter in here currently, that can pop down here and move back up. However, from what I'm understanding from Stacey's approach, he would argue that we've got a peak formation up here, a peak formation down there. We've come back up into this peak formation here. We've now broken the trend line. We've broken that structure of of that high. So there's the structure there. We've broken that. We've even come back up to test into here. We've now got two. We've got a peak formation here. Peak formation there, signifying that this is the high of the day. And we're now into the third hour of the kill zone, if you want to call it that. So it's now or never. So the theory is that this should blow off. And on the 1 minute chart, so that initial test, that initial trade failed, depending when your stop loss was. But then would Stacey say here, we've got another peak formation. You've got the micro M. You've got the micro M in here. And then you've got this pin bar. You've got the engulfment. So that would have engulfment, broken that. And then this is and then so you'd be in here. You would have been in there. Let's say you're lucky to get a pullback into that. 1 pip, 1 bar stop. And targeting, where are we? So we're 85, so target to say 50 down below. So we're targeting yesterday's lows, and that would have been the trade. However, you're still at risk of meeting this low again, and this proving to be a very solid support. So back up to be stopped out. And given this candle here, bearish candle, wick, still some to go. Theory is that this retracement on the lower time frames up will be filled. So the bias for today is for a bearish close. So that's the bearish close to 56.5. 1 hour time frame. This would be if that is the high of the retracement, you've got a confluence with the minus 272. So I'm going to go for the 1 minute, what do you call it, trade. That was the M formation, the pin bar, the engulfment. That was the entry. So we're at market now with a 1 pin bar stop. Let's just see how this plays out. Coming right back up into the final push. We could put the stop above the session highs for a 2 for 1. What do you think? Let's go for it. Let's go for it. Let's go with it. So I'm going to do a final recap before I shut this down and then just leave it, get off the screens, go for a swim. So the thesis is, got all this money down here to target. It's a very slow day in New York, nothing going on, really choppy markets. You've got that bearish wick on the daily chart, which could be filled down to 56.5 for the setup for the start of a new month, new week, next week to target lower. But in terms of the Stacey Burke stuff, is that the peak formation of the session? Is that the peak formation of the session? Those two combined is the peak formation of the session. 15-minute charts, how does that look like? So, kind of like a double top scenario. We've already had the break of structure. You've had a peak formation up there. You've had a pullback into that peak formation. We're at the top of we're at the upper third of the week's range. Ideally, I want to be shorting up here in London, but trading the New York session. It was a bit of a tricky open. You sort of had this spike low, and was that the peak formation? But we waited an hour, let things play out, let the market show us what its intentions are. So we've arrived at the prospects of the neckline of the M formation being targeted, which it kind of has. It's mitigated some of the price imbalance in the pullback. It's done a 38.2 retracement, almost a 50% retracement now. And bears are still in town. What more is there to say, really? You've got this support over here, which is troublesome, guarding the imbalances below. We're bearish while below the trend